Let's go. Greg Wright's Real Estate Team here with Martin Fabian, insurance broker, Fresno, California. And we just want to say thank you for joining us. Grab your pen, your paper, your note on your phone, whatever you'd like. Something to drink and 10 minutes with us on today. We're going over home and property insurance and fire hazard areas, rural and foothill type of properties mainly, so people have a better understanding as the sellers on why that's happening, what to expect, and what to want. Martin, insurance, thank you for being on our show today.
Yeah, thank you.
These clientele some value on what they can learn from you today.
Yeah, no, thanks for having me. And awesome, always a pleasure being on here with you and giving that value to our customers out there.
Absolutely. So what are your thoughts about the home property fire hazard insurance? And explain what that is up in the foothills. Is there different levels of fire hazard insurance? And what does that mean? Kind of put that all together for us.
Yeah, so I mean, my thoughts right out the gate, I'll be honest, everybody's super concerned about it. And is, what's going to happen? How much is my premium going to cost me? Am I going to get dropped? Right. A lot of State Farm clients and Allstate and all these bigger name companies are dropping a lot of people. And then a lot of these other, still A+ rated companies are still not insuring places like that as well. So they're having to go to this California Fair Plan, which we all know when it's a government ran thing can not always be the greatest thing for us. Right. So my thoughts on it, I mean, honestly, I would like us to see to go kind of like the Florida model with hurricane insurance, right? How they do it that way. I think that would be a great model for us to go after as far as things go, so we can keep our premiums low, and then people that want to buy those type of properties don't have to worry about necessarily insuring their house as fire insurance necessarily, but you know what I mean, they still could have that option, and it would be higher premiums on the fire insurance but not on the other side. And so that's kind of where I sit on it. And it's just, it's getting different every day. Sometimes I have houses, like I just had one yesterday that's a brand new home that got built up in the foothills, but because it's brand new, now it has all of the upgrades and things that are needed for fire, right, with the sprinklers in the inside of the house and everything like that. So I was able to get them insurance for $3,500 for the year, which is still high on a brand new build, but it's because of where it's at too, when I would normally see something like that at $10,000 for the year.
Ooh, man, just for insurance. And
just for
these higher prices is mainly because of the fire hazard itself, with all the wires, wildfires the last 10 years we've been having up in the mountains and foothills, right?
Yeah, especially for those areas. Yeah, we're going to see that increase. But then you also got to remember too, I think we spoke about this last time I was on here, right, is insurance hasn't increased, during COVID. We didn't see a really big price increase during that time. So now those price increases are coming because it should have happened back then, but they had laws stating that they weren't able to, right? So now they're coming. And same with like a lot of people got mad, hey, State Farm's getting a 22% increase in California. Well, that was already slotted. It was just going to happen over a couple of years, where now it's happening this year.
If you go up 3, 4, 5, 6% a year, with inflation, and you don't get that for 4 years, then you get it all once and end up being 8%. It's not greed, it's just business.
Yep,
What inflation 3, 4, 5% a year, right?
Yep,
I get it.
Exactly.
So what? Do you have the basics of the different fire levels? Is there 5 different levels, or how do you rate the fire hazard?
So the insurance rates them on a scale of a 1 to 10 scale, right? And that's how insurance rate it, 1 being the lowest, 10 being the most extreme, right? And anything usually over a 7 or 8 probably is going to trigger one, an automatic rejection or a non-renewal, right? You're just going to not be able to insure something like that. So that's how they, rate as far as when it goes to at the insurance company level, right? And then they have obviously a wildland urban interface, classification as well that works. That's out there. And then obviously you have just kind of like the CAL FIRE standard of, moderate, high, and then very high, right? how they kind of rate it. So it's just some places different, rate it differently, but the insurance companies is 1 through 10.
I get it. So when you have the higher the number, the higher the cost.
Yeah, and most likely that's what's going to happen, right?
When you have the worst fires, or the most likelihood of a fire, the risk goes up and the cost is more.
Correct.
And what is the lowest price fire insurance you've seen in the last year? And what is the highest you've seen?
Yeah. I mean, my lowest right now, I mean, again, it depends on where. If we're talking strictly foothills, I mean, we're $3,000, like I said, was probably one of the best ones that I've seen. And that was a brand new home with all the brand new upgrades, right? But then I've seen, $10,000 to $15,000 in premium, right? And then you talk about something like that, where you're lucky enough to get a private insurer and not have to do the California Fed plan. And then that's the $10,000 policy, right? And then, if you wanted to go a different route and say, oh, that's too high, I want to go the California Fair Plan, well, you're probably going to pay more than what you would pay at the private insurance level, most likely.
I see. Yeah, we had one up on the north side of Millerton in the higher Foothill area. It was a fire hazard area, pretty bad. And we got it for about $5,700 a year, I think, for the fire insurance. But it was a lakeview property, and on the other side of the lake, on the Fresno side, it was a fire hazard area, like it was on the north side of the lake.
Yeah.
And so they also rated it because it takes too long for the fire trucks to get over there.
Correct.
The Fresno side of Millerton Lake. And the difference in the insurance was half the cost from lakeside to lakeside. But the same house on the Fresno County side of the lake, Millerton, would have been about $200,000 more.
Oh, wow.
So $450 here, $650 on the other side. I'm talking about thousands.
Yeah.
So the insurance was way worth it to the buyer.
Yeah.
If you would have equated that into dollars, you got a house for about $525, which should have been $650, even with the higher insurance cost. So it makes sense. You will see the lower prices on the fire hazard insurance properties. That's why, quote, buyers say, "Wow, the Foothill properties are on sale." The reason is fire hazard insurance. So it just has to make sense for you as the buyer. And then before you go making an offer, call it an offer, or with your agent, make sure you get with Martin, get a fire hazard quote, so that can make sense for you when you figure that into your payment, what that actually going to be per year, that it makes sense.
Yep, exactly, and it, they're coming out too with different AI models, right? I know a lot of people are don't necessarily care for technology a whole lot of the time, but a company called Delos is coming out with a pretty big AI model to scale how wildfires would run and how they would come up and where they might happen at, right? To help with that kind of that cost of insurance and know, like, okay, yeah, this house we can insure, and this one over here we can't, type of thing. And so you'll see some of that coming out here probably in the next year or two, and you'll start to see prices probably either even out or maybe drop a little bit depending on things, right? Depending on how things go. So
interesting. Now, are you able to shop different insurance companies to find the best rate? Who can pick it up and get the best rate for the buyers?
So yeah, I am a broker, so I'm not just a State Farm agent or an Allstate agent, right? I'm not tied to one company specifically, but I do only, really like to use 3 of my carriers if I can, right? I do have access to over, 20, 30 plus different carriers, so I can shop it around. But usually I will say this: if my top 3 carriers tell me no, it's what we call a DIC, or a difference in conditions, which is what you usually couple with the California Fair Plan, then most of the other companies are probably going to tell me no as well.
Yeah.
And not always, but a lot of the times that is going to be, pretty much the same. So it doesn't make sense to just, go and shotgun effect and hopefully you find something. It almost sometimes just, hey, let's do the California Fair Plan with the DIC and call it good. Right. Because it's going to be cheaper than even going down that rabbit hole to the 20th company, because that 20th company is going to surcharge it with extra fees because they're a surplus market, not our standard market, right? And then it's not going to make sense.
Yeah, and it's real easy for the buyers to figure out, because once they get a quote from you, Martin, I can get with them and say, okay, your principal, here's your house payment, all included. Principal, interest, taxes, and insurance. Principal, interest, taxes, and insurance, all included. And here would be the price if we had a standard insurance policy without the additional fire hazard policy for that area. So maybe that payment's $2,200. Then we add the fire insurance to $3,500 that's paying a year. That makes your payment go up, let's say $200 a month. So you're $2,400. Well, as long as that makes sense for that property, for that area, maybe before you would pay $3,000 because the house wouldn't be $400,000, it may be $500,000, but they've dropped it 20% to cover the extra insurance costs. They come out way ahead. We're seeing a lot of that where the buyers are coming out way ahead because of this fire insurance challenge going on up in the Foothill area and the fire hazard area. Well, it makes sense. So we would want to run the numbers. I, as an agent, and Martin, as a broker on insurance, me as a real estate agent, to make sure those numbers work for you and they make sense to where you're happy. What else do you think the buyers, the sellers and buyers on these zones, fire hazard zones, should be aware of, or what would you like to share with them, Martin?
Honestly, one of the biggest things is, as you know, Cal Fire always talks about, right? Having that brush area around your house, at least having 100 feet, if not more, you know what I mean, it's taken away, and not having anything close enough to the house, that's going to really help you. You know what I mean? I know some of these new communities are going up there, like right across Table Mountain, right? Having a fire hydrant right there. And that's even a tough spot right now because the insurance companies just haven't really caught up that it's a new neighborhood, right? And so even getting insurance for me there right now is really, really hard for some of our carriers, because they're like, oh wait, we just see the zip code, and that's how they equate the fire insurance or the risk, right, based off of the zip code. So, you know, having those type of things there, and then obviously if you're, you know, buying an older home, you know, depending on what it is, you know, fluctuating your deductible might help you save on the price. Sometimes it does, not always, but sometimes it helps you save on the price, right? And I would tell people, you know, try and find homes that already have that brush surrounding cleared, so you don't have to do all that work yourself to then, you know, hopefully lower the insurance costs for you as well there.
Oh, yeah. And then if we could look for homes that were built, let's say, what year did they start adding the drop down interior fire sprinklers, like 2013, 2015?
2011 is when
2011 and 12. So we get a house that's that age or newer, they should have the built-in fire standards in the house, including the drop-down sprinklers from the ceiling, which one thing that Martin was saying from the beginning of the podcast was that could significantly lower your insurance costs, and we'll take it into account for sure.
Yep. That and, you know, fire resistant material as much as you can be used. I'm sure, I know it costs, you know, extra to do that, but when you're talking, you know, those $500,000, $600,000, $700,000 homes, it's almost worth it to lower that insurance premium for you, have that one-time cost, and then, you know, now you can have that as an upgrade to your home for there as well.
So let's look for newer homes or things with the fire hazard materials and sprinklers in them already, right?
Yeah.
Some people have actually updated their houses with that. Okay, question. What does a standard fire insurance policy in these fire hazard areas look like? Like replacement plus 25, or can you give us the basics of that in insurance terms so we can understand?
So, I mean, the fire plan itself, just from California, is just going to cover you on like the wildfire side, right? And then you're going to have a pretty high deductible on that side when it comes to that, right? And even a lot of these other just standard carriers are coming out with some pretty high deductibles of like $30,000, $40,000 when it comes to a fire. You know, when it comes to a wildfire happening and it's wiping out your house, or you having a claim, you know, you're going to be, if it's not more than $30,000 in damage, well, you're on the hook for it, type of thing. And every policy is going to be different. I can't tell you like, hey, this is exactly this way every time, because every company, for whatever reason, likes to be different, right? They like to be, okay, we're going to do this percent, this percent, this percent. But probably across the board, like I said, you're probably going to have a $20,000 to $50,000 deductible right out the gate. I can tell you that on the wildfire side. You know what I mean? And then from there, like I said, the California Fair Plan, is okay, but then you'll have to couple it with a difference in conditions to cover the rest of anything else that happens, right? Not just fire. So like if you got a flood or something inside the house, like a pipe burst, then that would cover that. The difference in conditions would cover that. And again, we can get those quotes pretty quickly. And those can come back, $2 to $10 grand. It just depends on where the house is at and if there is any claims history on that house. And it doesn't even have, which is crazy to me, it doesn't even have to be you as the person buying the house that's had claims. If the house has just had claims in general in the last 5 years, they're looking at that now and taking that into account. And so you definitely want to know and have that disclosed on something as well when you're coming and buying a house. And that goes for anywhere. So make sure you pay attention to that.
Nice. Well, I think we covered everything. So we'd like to use Martin Fabian as the brokerage there in Fresno for most of our properties and fire areas too. He's really good at that. Most competitive around. Excellent insurance. You could call him at the number there. Go ahead and give it up.
It's going to be 559-779-5048.
559-779-5048. Martin Fabian, insurance broker and real estate agent. Realtor Greg Wright, 559-260-1777. For any real estate help, give us a call for insurance or is there any last minute thoughts you want to share that you didn't get to say?
No, I think like you said, we covered it all. Just appreciate you having me on here again. And I feel like I said, if anybody has any questions about their current policies or anything like that, I'm more than willing to answer them or look through it and make sure you all covered properly. I know a lot of people just set it and forget it and then don't realize their home has gone up in value and don't have the extra coverage that they might need to replace their home. So
absolutely. Well, you do a great job for us and our clients. Rave about you. So we look forward to doing more business with you. Thank you for being with us today, Martin. Have a good day.
You too. Bye-bye.